everyone, welcome to the second episode in our 6-part webinar series, Sustainability in Practice, Turning Strategy into Action. Today we'll be focusing on how to streamline your sustainability efforts using digital tools. So before we jump in, just a bit of housekeeping. So just want to remind you to unmute your device after joining so you can hear our webinar speakers. Drop any questions into the comment section as we go, while always being mindful of and being respectful to other attendees in the process. And we'll be sharing these slides with you after the webinar, and the session will be recorded and available on our YouTube channel. So if you want to rewatch or send on to a colleague, you can do. Quick agenda for today. So we'll be doing some introductions into who we are and what we do. And then we'll cover the basics of ESG and why businesses are struggling to understand what it really means for them. Then we'll look into materiality, strategy and implementation, reporting, before wrapping up on a real-life case study and a Q&A. So before we get started, here's a quick intro into who we are for those of you who are new to us. So we're Positive Planet. We're a small team, but we always aim to make big impact. We work really closely with our clients to really understand their goals and also the people behind them. And this is so we can tailor our support into really what's most important. And this can take all shapes, from measuring emissions to building employee engagement via training to conducting life cycle assessments. And now a little more on our speakers. So my name's Emma. I'm Principal ESG Consultant for Positive Planet. I've also been a product manager twice for sustainability reporting tools. So I'm well used to working across digital and sustainability teams to really develop these tools which can help simplify ESG. And I'll just pass to Michiel.
Yeah, thank you, Emma. My name is Michiel Slinkert. I have a background in finance and providing direct lending actually on behalf of institutional investors, both in the UK and in the Benelux. And about 4 or 5 years ago, these investors started asking questions about the sustainability profile of the potential borrowers. And we found out that actually many companies needed support, needed some guidance on what sustainability means for them, what ESG means, what the possibilities are. And so I helped found Eevery, and we're a platform essentially which helps SMEs measure, report and improve on their sustainability profile. And we work very closely together with business partners like, for instance, Positive Planet. I'm very happy also to be on the webinar today to chip in where I can provide some outside opinions on the whole thing.
Thanks, Michiel. So first up, we want to know what your biggest ESG pain point is. It's already in the chat, so just feel free to fire any answers in there. We'll be collecting these throughout, and hopefully we can answer some of these challenges throughout this webinar. So let's get started just with the basics of ESG. So ESG is this framework by which all of your environmental, social and governance metrics sit. So under environmental, this is predominantly emissions, water, waste, resource use and biodiversity. Under social, metrics are more centered on your workforce, particularly diversity, equity and inclusion, health and safety and well-being, but also accounts for your external stakeholders, including your supply chain and local communities. Governance is more focused on how sustainability is managed within the organisation, and this can include information on board composition, pay and remuneration, and decision-making. But what else goes into ESG? And we'll be covering each one of these in more detail throughout this webinar and explaining how digitalisation can help this process. So let's start with materiality. This is the process that takes all ESG topics and then prioritises them into really what's most important for your business. Strategy, so this is where you can set measurable targets, KPIs and actions against those priority topics, but also making sure that implementation is considered here to really drive progress. And then finally, reporting. So this is where you can start disclosing this progress, preferably against a best practice framework, but perhaps just starting with an impact report and then moving on from there. But the issue is a lot of businesses really struggle to know where to start. So there's a huge amount of complexity out there, and often ESG teams either don't exist or they're under-resourced. It often becomes just a bit of a side desk job. And the fortunate companies who do have someone in place, this person then has to keep up with this never-ending regulatory changes, reporting standards updates, while still trying to collect accurate data and really foster buy-in from the board. And I won't pull out all these stats, just a couple of them. ESG regulations globally have increased by 155% in the past decade, and over a third of employees leading on ESG reporting have little or no relevant training to do so effectively. Michiel, I think this is a great place just to pull you in as well to hear your thoughts on why some businesses are just failing to start.
Yeah, thank you, Emma. One is just the sheer complexity. It all sounds pretty obvious, but we find also with our clients here in the Benelux and in Holland particularly that many of them, mid-sized and smaller companies, don't really even know what ESG stands for and what it all means. And it's such a broad set of concepts that putting it all together and making a sensible start is very often quite complicated. So, it's just getting going, which is difficult. But once people are in there and companies see that actually a lot of it is good common business practice and sense, but then expressed in a slightly different way, they actually start liking it, and it starts adding also to the strategic value and positioning of the company itself. So it's getting used to it. The start is difficult, but once it falls into place, we find that people get going and businesses start liking it and take advantage also.
Cool. So we can see that businesses are struggling to get off those starting blocks, but can you blame them? So the regulations change constantly. They're rapidly increasing as well, with little guidance on how to really respond properly. So it's no wonder that just getting off the starting block is getting harder and harder for companies who want to start reporting. And again, Michiel, from your experience in the EU as well, what are your thoughts just on this landscape currently?
Well, it's perhaps even worse on our side of the channel than it is on yours, because they continue to change the rules as people are already reporting. And it's very difficult to figure out exactly what is expected and what is required. A number of things also hit UK firms, like deforestation regulations, CBAM. There's a number of developments which is worthwhile to keep an eye on. So it's difficult, but there is one new framework, which is the voluntary SME standards, which we're going to touch on a little later, which actually has been designed to sort of cover and catch all reporting standard for most SMEs and mid-sized corporates in Europe, and it works rather well, and that is there to stay for the time being. So that's positive.
Perfect, thank you. And the companies that do start reporting, they tend to face even more challenges. So data is scattered across the business, is not collected in a uniform way. It means it's really hard to maintain accuracy, and then even harder to audit. Can notice Rachel's comment as well in the comment section there, who said the exact same thing. This is one of her challenges. There's also a lot of confusion, if you mentioned, around the reporting frameworks and what's actually meant by the requirements in them. And as mentioned as well, ESG is often under-resourced with limited capability. So what can you do? So let's break this down and go back into those key phases of ESG. So starting with materiality. So this is really where you work out your priority topics. Or more specifically, a double materiality assessment. So this is now seen as the best practice approach to materiality. And I won't go into too much detail on the specifics here, as there is a whole other webinar focused on this coming up. Yes, that is completely shameless plug to episode 6, which breaks down the concept of materiality, which I'll also be presenting. But in a nutshell, it's becoming essential to look at your business through 2 lenses. So you've got your outwards impact lens. And as a company, this is your negative and positive impact on the planet and society just for existing. So for example, a hotel would have like super high energy and water consumption. But if that same hotel employs local people, then it provides secure jobs and wages in the community. So it has this positive impact just by existing. Second lens is the inward facing view, which are the financial risks and opportunities caused by the planet and society onto your business. So again, let's imagine this hotel is located in an area of high water stress. So climate change then poses a risk to the future of its operations from drought potentially. On the flip side, perhaps this hotel can diversify its service into more nature-related activities. There might be an opportunity to expand into experiences such as jungle trekking or safari. And Michiel, it'd be great to hear your thoughts again, just read on the value of conducting a double materiality assessment.
Yeah, it's you have to do it in a practical way, I think, and within the context of your business. And if you look at the business with these two lenses, you will find some interesting results. We have a client who is a software services provider, and they were spending actually quite a lot of money on carbon neutrality and compensation, and they had a whole program going. And then they started looking at their business through this double materiality lens, and they found out that actually they were one of the largest employers in a small town in the UK. They had a large workforce local, so their impact on the social side was actually far bigger than on the environmental side and the carbon side, because they have very little impact on that, and it wasn't such a huge amount of emissions anyway. So they actually came to the conclusion that they were better off also in terms of impact improvement on spending the pounds on social programs, education programs, and also local programs than on CO2 compensation. So it's very often just making this assessment gives an interesting view on your business, also in terms of risks. I was speaking to a young guy in Amsterdam, and he had a very trendy sneaker platform all online, and they do droppings, and it's all super duper clever. And then the sustainability, I mean, there's the last thing he was thinking about. But he buys all this stuff from China, and a lot of those factories are located in the southeast of China, which is monsoon, well, not monsoon, but typhoon country. And it happened that actually part of those factories were inundated with big floods, and he ran out of stock for 3 months. So if he'd done a double materiality assessment and thought a bit about the impact of climate change on his business as such and on his supply chain, he would have invested in, let's say, a couple of weeks, maybe 3, 4, 5 weeks of inventory, instead of buying everything real time from China. And so it's also from a risk perspective, it's worthwhile to actually sort of sit back, take a step out of the box and have a look at it and think, hey, there's different aspects which you wouldn't think about that quickly, which come to the table actually by doing this.
Thanks for that insight. And let's stick with you, Michiel, again, just to explain how double materiality has been pretty tough to do in the past, and also how it can be much easier to do.
You're asking me?
Yeah.
Well, one of the things to do is actually take it within the context of your business without relying in first instance too much on all sorts of data sets. Make sure that you get more or less the basics of the information in your company collected, which on the environmental side is of course inputs like carbon, but also energy consumption and things like that. Use chat just to have a look. I mean, if you have a subscription, it's easy. Use ChatGPT to see what's happening in your industry. Just have a look. What are the main material issues? Where are we confronted with? What's happening? It'll give you some very good pointers. And then actually complete an assessment. Just sit down with the team and run it all through and say, well, and these and these and these and these are our materiality issues, and then whittle them down, because there is always many, but really prioritize and say, okay, well, on the impact side, take two. These are the two most important ones that we can actually make a difference, or we think we can make a difference on in the context of your business. I remember that always. This whole webinar, we are not going to change the world and have a major carbon reduction impact collectively, but we should try, so we can do it relatively to what our options are. And also on the financial risk side or the opportunity side, have a look at one or two risk areas or improvement areas, which could also result in significant cost savings sometimes, and try and create, and do it in a workshop, create priorities and some KPIs also, and some deliverables. And this is the plan going forward, and let's see next year and the year thereafter how far we can get. It's not something which you want to do immediately and see immediate results. It's not necessary. And remember also that there is a level that you could strive for. You can't be 100% super ESG and performant. I mean, there is a limit to what your business actually can do. not only in carbon, but also in positive impact for the community, for example, or for your staff, or for environmental impact or governance. And also in risk mitigation. I mean, if to stay in your example, Emma, with your hotel, I mean, aside from just moving the whole show, you're going to have to accept that maybe now and then it will get inundated, and you have to prepare yourself for that. And, there is a limit to what you can do, and accept that. Don't strive for a score of 100%. I mean, if you have 85 or 90% scoring on the ESG, you're doing fine. It's actually excellent.
Amazing, thank you. So let's move on to strategy and implementation. This is where you can really start to make this measurable impact. So once you've identified those topics, and these are the ones that are materially important to your business, you can set a strategy around these topics. So again, keeping with that familiar ESG framing, which more adventurous companies may want to switch up and personalize, but regardless, under each pillar should sit targets. So these are near and long-term targets so you can make measurable progress, KPIs, again, to collect the relevant data to support reporting, and also that progress made towards those targets, and the action plans as well. So these are initiatives to drive impact within the business. But we also just want to highlight that it doesn't stop with strategy, and implementation has a real key role here. So strategy obviously is a great place to start, but you need to do something about it to actually push that needle on impact. And this is where sustainability progress can falter. So a strategy without guidance or a roadmap will fail to start, and often strategies do fall victim to set and forget. But digitalization can really support this implementation phase. So you'll be able to see results instantly in digital platforms, and this can help you measure that progress in real time. It also gives you this central place for understanding your key impact areas, helping you dedicate time and resource into the right place and really focus on what matters. And automated advice as well. So any tool that you're using, support should be available in the platform. For example, if in the strategy phase, you decide you need to draft a sustainability policy, the tool should now be providing templates and guides to help you with these processes. You're not just trying to take on everything yourself. And Michiel, maybe just quickly as well, it'd be good to hear from you what kind of other implementation support the tool should be providing.
Well, it depends a bit on the needs, of course, also of the user. But one of the things which we at Eevery will provide, and which people can also do for themselves, is make sure that all your information is collected in one place, so that you have your information stored centrally, which means a lot of the information and also your KPIs to a degree are qualitative instead of quantitative. So do you have policies? Do you have this? Have you trained your staff? Things like that. Which it's handy also for audit trails and for measurement purposes to have it all in one spot under a central point, so that it's accessible and that you can either use it for reporting, or that you can use it for future reference, or that you can update these things. So you want to centralize the information as far as you can, and then the platforms that you use should provide the tooling that you need. That could be carbon measurement, for example. It could be a report generator. It could be you have tools which help you with CBAM, not unimportant if you're exporting into the EU. Also think about NIS2. NIS1, which is data security. You have tools for that. It's under the governance, but it is important. We had actually a breach in a laboratory here in Holland this week, where over 650,000 records of ladies who were participating in a collective national breast cancer research. They stole all the data, including names, addresses, passport numbers, everything. And that has major negative impact, of course. So data security is also something which is important in your governance section to have a look at, because you're also under NIS2 as a management of a company more responsible if there are damages. And make sure you have the right tooling for that. It is important.
Thanks, Michiel. And then reporting as well. So how to shout about your progress. So the sustainability reporting landscape is incredibly complex, as we saw earlier. I've tried to make a bit of sense of the various acronyms by categorizing them, despite some blurring between a few of them. So top left, you've got your global goals, and these are targets or principles you can start aligning towards whenever you can. Top right would be your reporting standards, which are way more prescriptive and require reporters to closely follow the disclosure requirements. And these consider both mandatory and voluntary standards. Bottom right would be your certifiers. So these are the ones that give you that stamp of approval after a rigorous validation phase. And the bottom left are your rankers and raters. So these are more of a questionnaire format, which will give you a score at the end and are often requested by customers so that they can benchmark their suppliers against each other. But it's tough to understand which one you should be responding to. So various factors come into play, such as company size. So SMEs can really utilize streamlined reporting, plus what your customers are requesting. So customers will often request CDP and EcoVadis scores. The ESG maturity and ambition of the responder. So this was where you could look at complex reporting versus disclosing essential information only. And the regulations are specific to each region, with some reporting is mandatory in some countries and voluntary in others. But again, digitalization actively supports these processes and it helps to remove that reporting burden. So in the past, the reporting process has meant a real manual mapping of disclosure requirements. There's also uncertainty over whether what you're writing actually meets the requirements. And for anyone that's reported against multiple standards, you'll understand that reporting burden as it comes around each cycle. So you end up disclosing the same amount of data multiple times in the year. But these once very manual processes can be streamlined. So using any tool, you should be able to instantly assess the readiness of your report. So if you had to start reporting tomorrow, where would you meet the requirement versus where does more work need to be done? You should be able to map your data points as well, so you can quickly see which data points are relevant to your organization and just report on those ones rather than looking at everything and thinking which ones do I actually need to disclose against. And finally, actually create these reports as well. So you're holding all of your data in one place and creating reports in an instant. So platforms should be building in elements which can write up the reports for you based on the data added. And Michiel, again, just want to revert back to you to just highlight a main opportunity really from digitalizing the reporting process.
Yeah, well, I can only really speak for our platform in that sense. And what we've done is we're using all these international reporting frameworks as sort of reference benchmarks, and then we help our customers or our business partners like yourselves help our customers upload all the data they need, and then we create a benchmark or a baseline assessment on completeness and the amount of information you have and the completeness of that information. And then by pre-filling going forward, you just look at the deltas and the additions and the additional stuff that you want to upload just to decrease the workload. So you start, it's a bit of a chore to get it all in there and make sure that it's calibrated to these standards and that it's accessible and objective. But then going forward, you start looking only, of course, at the changes that you've been trying, and also the positive changes that you've been trying to achieve. So you try to use the platform and its options just also to decrease the workload. I mean that is essentially what it's all about. Instead of having it all in different Excel spreadsheets and in all sorts of different formats, this really helps. And it also allows you to, with the press of the button, say, well, if I want to make a report, let's say in the future against a GRI, for example, which is globally probably the largest intrinsic framework being used, and then you can immediately see, well, this percentage of all the disclosures that I would want to make is already available, and I have the data, and I need to focus on ABC, and then it's complete, and I can generate a report. So it helps compliance and the workload going forward considerably if you spend some time and effort in doing it properly at the beginning.
Perfect, thank you. And this is a bit of an example of this and how digital tools can really help produce a report. So on the left, you've just got a questionnaire, and this is where you just input your data, really easy. And on the right, the platform then writes up those answers. It produces charts and tables in the required format. So you can very quickly have a VSME compliant report, which can be used internally to measure progress or externally with various stakeholders, including investors, customers, and your supply chain. Case study. So again, just going to go back to you, Michiel, just to run over Raggers and ZNBV.
Yeah, thank you. Raggers and Zoon in proper Dutch it's a family business. They've been around for about 90 years, and they're in the cleaning services. So there's nothing super sophisticated about this. Schiphol Airport is one of their clients, and they have quite a good, very loyal team. Over three, I think it's even closer to 400, and what essentially they wanted to do was make an ESG sustainability assessment, because they want to demonstrate that they are on track to create a sustainable, future-proof business. And they were the problem they had to a degree was that in the cleaning business there is only so much that you can do on the environmental side. You can have a look at the materials you're using, maybe the chemicals you're using. They did a bit on their transportation and their vehicles, but Holland's a small country, so your impact is not going to be huge there. And then they did, as you referred to in the beginning, Emma, they did a double materiality assessment. And they found out that actually their main challenge was on the social side. That as a cleaning services business with relatively, it's not super difficult and high professional, they're very professional people. But the social elements to the positive impact of Raggers is far bigger actually than the environmental. Governance is also important. If you're cleaning buildings and offices and things, your people are in your clients, so it has to be trustworthy and this and that. And they found out during that assessment that of this team, more than half was going to reach pensionable age within 5 years. They never really considered that. And that means that they need to now, and that's what they've done, they need to now start a program to attract young, motivated, very diverse group of new team members, just stay in business. And for that, their materiality assessment and their objective ESG analysis helps tremendously, because they can demonstrate that they have their policies in a row, that they have good diversity policies, whatever. And they also hired someone new as an HR director, a lady, to really consolidate that part of the business. It was a game changer for them, actually. And it makes the business future-proof, obviously, going forward.
Amazing, thank you. And then just to wrap up with some next steps. So consider obviously completing a double materiality assessment, start to collect this ESG related data, start researching the digital tools out there, and work out which framework is right for you. If you would like to book in a call with me to discuss any of the above, from getting started with double materiality to which framework might be right for your business, and I can see a message in the chat as well about suggestions on digital tools, I'm also happy to talk you through which one might be right for your business, as there are multiple options out there. I'm just going to flash up a QR code as well on the screen. So this is how you can book a slot in my diary directly. But these slides will be circulated after this webinar as well, so no rush to get that in now. And also just a quick call out for episode 3 as well, which is on the power of people. So why employee engagement, is key to sustainability success. And that's in 2 weeks' time with my wonderful colleagues, PK, our carbon literacy trainer, and our head of client engagement, Emily. Another QR code to sign up, but don't worry, I'll share these slides afterwards. You'll have everything. And then we're just going to wrap up with the Q&A. We are at time, but we can stay on for a few more minutes as well. If anyone does have any questions they want to drop in the chat, I can see one here from Emma, so we can start there. So is a double materiality assessment relevant for a small business? It's a good question, and I know why you're asking this, and it's to do with, so for anyone that's not sure on this, double materiality first came around really as part of the CSRD, and this is where companies were then mandated to start looking at their business from an impact point of view and a financial point of view. CSRD mandated pretty much the largest business in Europe to report first, but this was then going to cascade down into kind of secondary tiers and then smaller businesses after that. However, it's all up in the air in Europe at the moment, and those thresholds are still being determined. However, this is still an incredibly valuable tool for businesses to do, just to understand their financial risk and opportunity, as well as their impact as well. It also gives you I mean, at the end of the assessment, you've got something you can take to your board and say, these are the risks that we need to put strategies in place to mitigate. And here are some opportunities of how we can diversify our business and really change our strategy as well to wrap in sustainability as well. Michiel, do you have anything else to add there?
No, I think you're spot on. And if you do it lightly, like we're all doing it with the sliders on our platform, that you can just assess with your team and rank them. It also provides valuable pointers for things that are going well and which you could just sort of consolidate and improve a bit on, and also report. I mean, that it enhances the business value if you do the assessment also from just an intrinsic business point of view. Like the Rakker story. I mean, if they hadn't changed their social policies, they would have run into real problems going forward.
Amazing. Another question from Jeff as well. So we are a retail SME. What elements of ESG should we focus on first? Well, my advice is to start with the done materiality assessment, because then you'll know exactly what elements of ESG to focus on. That's the outcome of it, is you'll have your priority topics, and it may be surprising as well what comes up. But then from there, you'll know what your priority topics are, which topics fall into review, which means maybe have a look at in a year or two's time, and then which topics you don't need to consider either, just not materially important to your business. Michiel, anything to add for Jeff?
No, I fully agree with that. I'm just wondering what exactly are they? What are they selling? What are you selling?
Jeff, if you don't mind sharing, drop it in the chat. But no worries. And then another one back from Emma as well. So Emma's already done a risk and opportunity assessment for TCFD. So does she have to start again for done materiality? So, I mean, in the short answer, a done materiality assessment is separate to your TCFD report, but having done the risk and opportunity analysis means you're halfway there. You can just use that to form the basis of your done materiality assessment and just look at the impact side. So it's time saving essentially by having already done it.
Yeah, and also to add to that, if I may, Emma, if you've done most of this work for TCFD and you have the assessment and you have most of the data, adding a comprehensive VSME report to that with a bit of guidance from Positive Planet is very, very straightforward. And then all of a sudden you also have an objective, comprehensive report on your whole sustainability profile. That I would definitely recommend thinking about that. Yeah.
Nice. How about a reply back from Jeff, who's in engineering materials as his retail SME? So I guess, yeah, I mean, without not knowing too much or doing the assessment, but things like carbon emissions, embodied carbon is likely to come up, potentially the supply chain. Yeah, I'd have to look at the whole thing, but yeah, good to know.
Yeah, and think a bit about who the customer base is. That is also if it's private individuals for home. Well, I don't know what they're using the stuff for, but then it's a different ballgame. You think about some other aspects of ESG than if it's a B2B type of operation where it's companies which are using your bill. We have a couple of clients who are into this business. They supply to big shipyards, and they actually have made ESG assessments, even though they're a very, very small retailer, really. Because their customers want a bit of comfort on where am I buying the stuff and what's behind all of this. And yeah, so it can help. Yeah.
Perfect. And then Andrew Todd, so what is a small UK manufacturing business owned by a larger US group currently mandated to do at the moment? So again, we'd have to look more specifically into your business, certain things of employee numbers, turnover. If you're asking this from a CSRD linked point of view, you may not be required to actually disclose from a mandatory point of view yet, although there is some regulations coming down the line. But your parent company may start asking more data from you. So it's always good to start collecting that data now so that you can report up to your group, who will need to be reporting on a consolidated basis. So I hope that helps, Andrew, but feel free to drop some time in if you want to talk in more detail. We also have a compliance webinar, which is episode 4 coming up as well, where we'll cover this in more detail.
We have a couple of clients actually in a similar situation where the US parent is using GRI as their global reporting framework, and the local UK subsidiaries in manufacturing and in Holland, they have generated GRI reports also for their internal to facilitate essentially the internal group reporting on a consolidated basis towards the US.
Amazing. Another question in from Moses. As a startup developing a reporting tool for tracking the sustainability of branding materials, is it advisable to go this niche, to niche down to this specific focus rather than serve all types of businesses' reporting needs? Again, Michael, I'm not sure if you want to take this one. I think there's benefit in going niche and staying kind of where you are because then you have a key audience. But if you're talking about businesses' sustainability reporting needs, there's obviously so much space within that as well.
Yeah, it very much depends on what your audience, what you think your audience is, and what you want to communicate. I mean, if you are just for the brand, I would definitely create not to use it maybe, but to create an objective ESG analysis in line with global standards, just to mitigate reputational risk. That I wouldn't send that over or use it directly, report like that as marketing materials. I mean, people don't even look at that. But if you ever get awkward questions, it's very good that you have the analysis and that it's all there and it's objective and that you can demonstrate, hey, we've been working on our ESG sustainability profile in the correct way, and we've been improving throughout the years, and then you can just back that up with internal and external reports. So I would definitely also, from a brand perspective, build the proof case, if you would, the internal proof case, just with reputational risk considerations in the back of the mind. And yeah, I would do that. If you're selling, I mean, if you want to communicate with big customers or with banks or with local governments, I would always just use that report that you've made, because that is what they will be looking at. They will say, hey, is this counterparty? Because they're your stakeholders. Do they know what they're talking about? Are they aware of ESG and sustainability issues, and are they doing something about it? And then you need the proper report, because they want to have a look at that. So it depends very much on who essentially you're communicating with, if you would. But it all boils down to having a proper objective assessment in your drawer. It's just like your financial statements. I mean, you have your financial statements, they're good, and you can reference those in marketing materials, in communication to the bank, to whatever. And this is very similar. Make sure you have a good sustainability report, objective, defendable, validated if necessary, not by an auditor perhaps, but for instance by Positive. And just make sure you have that, and that makes sense. Yeah.
Cool. Well, the questions have slowed down a bit, so we will wrap up there. But thank you for joining, everyone. As I've mentioned, we'll share these slides as well, so feel free to drop in any time in my diary to talk through any of these questions in more detail. Thanks. Bye.